Hey, everybody, it's Greg Harrelson here with Century 21, the Harrelson Group, with my co-host Abe Safa, also with Century 21, the Harrelson Group, and we just want to, share with you on another live, video of the Myrtle Beach Real Estate TV, and just kind of share with you what's going on in the real estate market. We'll share with you factual data, and then give you some interpretation of maybe what we're dealing with in the marketplace ourselves. So, Abe, thank you again. It's another week gone by, getting close to the end of the year. Exciting times, right?
Yeah, absolutely. I can't believe Thanksgiving is over. Looking at Christmas coming up and then brand new year.
Yes, yes. And I think a lot of times, one thing that I'll say about the brand new year coming up or the end of this year is I think it's amazing how busy we are around the holidays. I mean, like I understand that there wasn't a lot going on Thanksgiving Day, but the day before, the day after, and the weekend, there's a lot of activity. So for those people that are wondering, does anybody do anything around the holidays? The reality is the only time we're probably really going to slow down is really the week of Christmas. But the week after, the weeks prior to, matter of fact, we get really busy. So just for those of you that are wondering, is there anything going on? Yeah, there's a lot going on. Let's dive into the numbers, though, as we usually do, and then we'll kind of jump around from there.
Yeah, I mean, looking at the numbers, Greg, there's not a whole lot of change in actual numbers compared to the last call that we did. Inventory is still really low,
Yep.
relatively speaking. Of course, we had that big spike, 4 or 5 months ago, but ever since that one spike, it kind of leveled off and it's been pretty flat ever since. Number of pendings relative to inventory really hasn't changed much, nothing significant as of last week. But there are like certain pockets in the market right now that I'm noticing where there's no inventory
Hmm.
that are doing really well. Like, for example, I was talking to a client this morning that's got a condo in Ironwood over at Bedford Resort, and he's thinking about putting it on the market. And his perception was this is not a good time to be a seller
Mm.
because interest rates are so high. There's no buyers. I'm like, look, there's only one unit in all of Ironwood on the market for sale, and it's under contract. So there's zero competition. And we actually see that in quite a few different resorts or condo buildings around town. Really, you got to be careful if you're an owner, if you're thinking about selling. Don't just pay attention to the overall um, news that you're seeing, the overall stories about interest rates. Yes, they are high, but there's still a lot of buyers out there still buying right now in the market. Inventory is still really low, so it really has to do with where you are. Now, there are certain buildings where I'm telling sellers, no, don't put it on the market right now
Yeah.
because they're competing with 30 other units. Like, no, right now you don't want that. If you're competing with 30 units and the interest rates are high, it's not a good
Yeah.
time. So there's both scenarios. So you really got to be careful on where you are, and definitely ask Greg or myself, and we'll gladly talk to you about where you stand.
Yeah, it's amazing how, like, we can talk on a national level, we
Mhm.
can talk on a individual local market level, and then we can talk on an actual community or a building level. And all three of those are different conversations. Now they are all influenced and they're kind of interlinked, but what we may say nationally may not apply locally, and what we say locally might not apply to all communities. So it's important that you understand that. I think what's most important right now with choosing real estate agents and buying and selling is you need to make sure that you're going with somebody that has a lot of knowledge. You don't want to take many risks on just choosing any agent. Choose somebody, whether it's us or somebody else. Just make sure you choose somebody with a track record, with knowledge, and especially knowledge of being able to navigate through these types of markets. Um, the interest rates, they came under 7. They were over 7 and they came under 7. They've been hovering, I think, around 6.62.
Mhm.
I believe that's about what we reported last week. Is it pretty much flat right now, week over week?
Yeah, it's pretty flat. It's been that way since that big drop we had. I think it
Yeah.
was what, November 10th or somewhere in that range.
Yeah.
Ever since that big drop, it's kind of been level. Up a
Okay.
little bit, down a little bit, but nowhere near the 7% mark.
Yeah. And here's what I'm shocked at. Not I shocked. Here's one thing that I'm surprised, but pleasantly surprised. I hope this is not a problem, but that is it 6.62 and 7 psychologically may appear to be huge, but really it's not that much of a difference. But man, we saw a spike in buyer activity. I was one of my agents was one of the agents in the office was like, "Oh my gosh, I got 3 more sales in the last week." And like, I haven't heard an agent saying, "Oh, I just got 3 more sales in the last week." I haven't heard that in a while. I've been hearing agents talk about, "Gosh, you know what? I've got so many sales falling through, and my buyer just won't make a move." And now all of a sudden, interest rates went down just a little bit, and that spark, I believe that was the spark that got some buyer activity. Did you experience the same thing?
Yeah, absolutely. As a matter of fact, we just put 2 buyers on the contract just in the last 3 or 4 days. We're definitely seeing a spike in buyer activity. And yeah, I
Yeah.
mean, it's from 7.22 to 6.62. If you look at the numbers on a $400,000 mortgage, it's only like $140 a month or $160 a month difference. So financially, it's not that big of a deal, but psychologically, it was a huge deal.
Yeah.
Even talking to lenders, the last 2 or 3 weeks, we've seen an uptick in mortgage applications, and that's one of the leading indicators we look at as
Yes.
to how many buyers are coming into the market, and they're seeing an improvement because they've been getting battered, when they were above 7%, but now
Yeah.
it's starting to see some good activity.
Yeah. And when I said, I hope this is not a bad thing, it's like, I don't really know. I'm surely not an economist, but, I know that they want to slow the economy down because of the inflation conversation that exists. And, can you imagine, though, if the interest rates went to 5.75, 5.9? I'm thinking the buyers would be coming out of the woodwork again. What do you think?
Well, yeah, 100%
Yeah.
agree. I think if we get anything with a 5 in front of it,
Yeah.
I think we'll see a big spike in buyer activity. We get in the low to mid fives, I think things could start heating back up again. But I don't think the Federal Reserve is going to allow that.
I agree. I
I
agree. And that's one of the points. Now, for everybody, a lot of times I'll say this is an opinion versus this is a fact. Right now, Abe and I are giving opinions, right? We surely don't know what the Fed's going to do. We don't have a crystal ball. But what I found, that here's one thing that I learned, or I believe I learned, and that is it's not going to take much to get buyers back on board. It's not going to take 3% interest rates or 4% interest rates to get buyers back in the market. It's actually going to take very minor adjustments. So what I believe is at some point, probably not soon, at some point, we're going to see a 5 in the number, high fives. And I bet you at that point, that's where they level off. Somewhere in the mid to high fives is where they level off. And it's probably going to be in a very, very good market again when that happens. In other words, I don't think it's going to take 3% interest to stimulate the real estate market. Don't think it'll take that type of scenario. What are your thoughts on that?
Yeah, I absolutely agree. And you and I have been, off the record, we haven't put it on tape, but you and I on the sidelines are talking about the buyers haven't gone away, right? There's still buyers out there. There's still a lot of demand. They still want to buy homes.
Yes.
Okay. They're just kind of sitting on the sidelines right now, waiting for an opportunity because with the way prices are, with the way interest rates are, it's really unaffordable for a lot of people. So yes, if we get back into the low fives, I think the market can get really hot. I think a lot of these buyers get sucked back into the market again.
Yeah.
But the Fed's meeting, I think, December 12th or 14th, somewhere in that range, and it looks like there's going to be a 50 basis point hike, is what is predicting right now. Now, that doesn't necessarily mean that interest rates will follow and go up with it. A lot of times, the mortgage rates are already taking that into account, right? But we don't know. It could go up. It could not go up. But yeah, I don't. To answer your question, I don't think we need to get back into the 3% mortgage rate to actually see a hot market again. It could be high. If we get into the fours, even high fours, I think it'll be gangbusters again.
Yeah, I think if it gets into the high fours, there's a chance that we create another problem for ourselves and that we have to correct it later on. So I just my intuition, my gut tells me that we're going to land somewhere in the fives at some point, and the Feds will do everything they can to influence some sort of moderation or flattening of it. I mean, markets will still force it to bounce up and down, but I have a feeling they don't want it in the fours, and I think they like it in the sixes right now. But eventually it comes down a little bit below the 6 mark. And if it came below 6% right now, the market would just go gangbusters. But again, that would be contradicting what they need to accomplish with inflation. So I just don't think that will happen. But I think the message that I want to get people that are on top of the fence about on selling, the message I want them to hear is right now at 6.62, if the buyer does the 2-1 buy down, gets a mortgage with the 2-1 buy down, then they're going to be at 4.62 the first year, 5.62 the second year, and most buyers are going to believe that within the next 2 to 3 years, the interest rates will be in the fives. So they could actually buy right now at today's interest rate with a 2-1 buy down program and get the interest rate all the way down into the fours and the fives, and then refinance when they can refinance in the fives. So now is a fantastic time to take advantage of the market. So even though you're seeing 6.62, that doesn't mean that's the only option for the buyers. We have options for the buyers to get under 5% already. It's just time sensitive in the sense that it doesn't stay there for the life of the loan. It just gives them enough time to have opportunity to refinance later on.
Yeah, I mean, I can even argue that it's a better time to buy right now as a buyer than if it was actually 4%, right? Because you can get here's what's happening right now, right? Sellers are becoming more realistic.
Yes.
They're not like they were 6 months ago. Buyers are coming in below asking. Okay, so the ability to get a lower price right now and the ability to get the interest rate bought down by the seller right now are really, really strong. As opposed to if interest rates all of a sudden went to 4%, the market's going to take off again. All of a sudden, sellers are going to go back to the way they were 6 months ago, 12 months ago, and being very stingy on their price, very stingy on everything else, and you could end up paying more. So go ahead and you can lock in the buy down, interest rate buy down right now, and then within 2 years, you'll be able to refinance and stay at that lower rate and still get a good price right now with all the contingencies that you want.
Yeah, I agree. I agree with you. All right. Well, Abe, hey, thank you so much for bringing that data. And for those of you that are listening, if we can do anything for you, we'd love to earn your business. Of course, I'm Greg Harrelson, and this is Abe Safa, both with Century 21, the Harrelson Group. These are our cell numbers right down at the bottom of the screen. Please reach out to us and stay tuned. We do this every week. So please hit subscribe, maybe even hit that little bell so you get a notification whenever we do create another Myrtle Beach Real Estate TV update. Again, it's every week, so we're not going to bombard you. You're not going to get any kind of bombarded on a daily basis from us. Let us know if we can do anything. Abe, thank you so much.
Thank you, Greg. Thank you all for watching.